I hate to pry, I hate to ask, but have you finished your taxes yet? The deadline to file is fast approaching. I'm required to remind you, apparently. And if you're overlooking a few of the lesser known deductions, you might find that you're overpaying Uncle Sam. No one wants to do that. Help us to understand what's happening is Medora Lee. She's a money and personal finance reporter with USA Today, looking like you're ready to take your passport picture. Medora, great to have you with us from Chicago. We appreciate you waking up with us. Most people are aware of the child tax credit, but they may not realize they can count the cost of summer camp. So explain that for us.
Yeah, this is a great one for anyone who has kids. During the summer, the kids are out for the whole summer with nothing to do. So, what a great time to send them to summer camp and take a tax deduction for it. If your child is under the age of 13 and you send them to day camp, you can take up to 35% of up to $3,000 off of your taxes for that. So that's a great one. The only thing is that you have to be working, and it doesn't include overnight camp. So it's just day camp. But then also during the school year, if you have before and after school care, that counts too. Or if you hire a babysitter to watch your kids during the summer, that will count too.
Okay, that's useful. And I guess there's also an exception to a tax rule dealing with student loan interest. Where's the potential deduction hiding there for folks?
This is another great one a lot of people overlook. You can't deduct the balance of your student loan, like your whole payments every month, but you can deduct the interest if you have a student loan. So, you should try to keep track of what kinds of interest you're paying, and you can deduct up to $2,500 a year, but just the interest, not the balance.
After 2018, we know that most people lost their ability to deduct moving expenses, myself included. But there is one group that still qualifies. Who are they, and how does that work for them?
That's true. It's if you're in the military, you can deduct your moving expenses. You just have to make sure that it is kind of close to the time that you're starting your new job. And I think there's like a distance requirement as well. It has to be something like 50 miles away at least. So that was the only exception that they made when they took away moving expenses in the Tax Cuts and Jobs Act.
Okay, well, it's something for folks out there. And what is the state sales tax deduction, and who does that work best for? I know there's a catch involved in that one too.
So this one is so contentious. It is the you can deduct some of your state and local taxes, which includes property tax and income tax. And so it really benefits a lot of people who are in high tax states, which typically are blue states like New York and Illinois. And so this is something that in the Tax Cuts and Jobs Act of 2017, they capped it at $10,000 to try to pay for some of the other tax cuts. And so this has really upset a lot of people in these high tax states. So they're looking to now double that or eliminate it altogether because they feel like it's unfair to people in those states. So we'll see what happens because so for now, the cap is still $10,000.
All right, well, hopefully someone watching realized something they can deduct and get more money back. All thanks to Medora Lee. We appreciate you waking up and joining us from Chicago. Thanks, Medora.
Thank you.